A 12-cent insult once cost the world's greatest investor 20 years of his life and a staggering $200 billion in opportunity cost. This is the story of Warren Buffett's most self-admittedly stupid decision. In the early 1960s, Buffett's investment partnership was hunting for cigar butts, failing companies trading for less than their working capital. They were ugly, unloved, but had one last puff of profit. He found a perfect target: Berkshire Hathaway, a once-proud New England textile manufacturer bleeding cash as the industry collapsed under the weight of cheaper foreign competition. Buffett began buying shares in 1962, calculating that as the company continued to close mills and sell off assets, it would buy back its own stock at a premium. The CEO, C. Barry Stanton, made regular tender offers to buy back shares. After one mill closure, Buffett visited Stanton, who verbally agreed to buy the Buffett partnership's stake for $11.50 per share. Buffett was ready to cash out and move on. But when the formal written offer arrived, it was for $11.37.50. Stanton had tried to chisel him for an eighth of a point, a paltry 12.5 cents. For Buffett, this was a breach of trust, a personal insult. His blood boiled. Fueled by ego and a desire for revenge, Buffett abandoned his own investing principles. Instead of selling, he started buying. He instructed his broker to acquire every share of Berkshire Hathaway he could get his hands on. It was a hostile takeover. By 1965, he had control. At the next board meeting, he sealed his victory by firing C. Barry Stanton. But his triumph was hollow. He now owned a dying business and a doomed industry. For the next 20 years, Buffett and his partner, Charlie Munger, poured capital into the struggling textile operations, trying to keep the inevitable at bay. That money, Buffett later calculated, could have been invested in far superior businesses, compounding into hundreds of billions of dollars. He finally shut down the last of the textile operations in 1985. The lesson, in his own words, was monumental. Letting his ego dictate a financial decision trapped him in a terrible business for 2 decades. While he eventually transformed Berkshire Hathaway into the legendary holding company it is today, he did so in spite of the textile business, not because of it. It stands as a powerful reminder: the market rewards discipline, not grudges. One tiny insult, 20 wasted years. Billions left on the table. That's what happens when ego enters the portfolio. Follow if you want investing lessons that actually save you money.